Welcome to the deep dive. Today we're tackling a really significant story that's been moving fast. The announcement and then the partial pause of Donald Trump's reciprocal tariffs.
Yeah, it's been a bit of a whirlwind, hasn't it? Lots to unpack.
Definitely. If you've been following the news, it might feel confusing. So our job today is to cut through that complexity, give you a clear understanding of what these changes actually mean for global trade and, why you should pay attention.
Exactly. We'll be looking at the tariff announcements, the immediate impact, drawing on recent news analysis.
Right. The mission is basically to pull out the most important insights. What's changed? What does it mean? Why does it matter?
Let's do it. It's a situation with, many layers.
Hmm.
But if we look carefully at what was announced and what happened next,
We can get to the core changes.
yeah, and the likely consequences, without getting bogged down in the day-to-day noise.
Okay, let's dive right in then. So April 2nd, this big announcement happened. Some people even called it Liberation Day.
Right.
Introducing this idea of reciprocal tariffs. Now, for our listeners maybe newer to this, what are reciprocal tariffs actually aiming for here?
Well, think of it like this. If country A puts a tariff, on goods from country B, this reciprocal idea means country B slaps a similar tax back on goods from country A.
Okay, tit for tat, basically.
Sort of, yeah.
Yeah.
The intention is supposedly to encourage fairer trade by mirroring the tariffs other countries put on American stuff, leveling the playing field.
Got it. And that announcement, it definitely caused a stir.
Oh, absolutely. A big reaction in the global trading system and, like you said, the financial markets, too.
They certainly did. The speed of that reaction, the size of it, it really showed how sensitive markets are to these policy shifts.
No kidding.
Then, barely a week later, April 9th, we hear about this partial pause on some of those tariffs.
Right, at the pause.
And that news led to what they call a relief rally in the stock markets. What does that mean, a relief rally?
It's basically a short-term jump in stock prices. It happens when there's, unexpected good news after everyone's been worried.
So the good news here was pausing some tariffs.
Exactly. It eased some of those immediate worries about the negative impacts on business and trade, so stocks went up briefly.
Right, a temporary sigh of relief for investors. But, and this is really crucial, isn't it? This pause wasn't a complete reversal.
Not at all. That's the key detail.
So what was put on hold, and maybe more importantly, what wasn't paused? What's still moving forward?
Okay, so the pause, it applies to some of the newly announced higher rates, the ones planned to kick in above a certain level.
Higher rates, okay.
But, and this is big, the new minimum 10% tariff rate on goods coming into the U.S. from all countries.
Including the UK.
Including the UK, yes. That became effective April 5th, and it's still very much in place.
So that 10% stick around. Are there any exceptions?
There are a few.
Yeah.
Specific things like pharmaceuticals, microchips, and they mentioned some other items. But broadly, that 10% is the new baseline for almost everyone.
Wow. So even with some higher rates on hold, this 10% minimum has just fundamentally changed the cost of treating with the U.S. for pretty much everyone.
Precisely. And it gets even more complicated when you look country by country.
How so?
Well, while some places got a pause on potentially much higher tariffs, China didn't get a pause. In fact, tariffs on goods from China went up.
Up. Oh.
Substantially, up to 125%. Plus, there's an additional 20% tariff linked to fentanyl.
125%. Good grief.
Yeah. So while 59 other territories have this temporary suspension of rates above 10% until July, the trade pressure on China has actually ramped up significantly.
Okay, can we make this more concrete? Give us some examples of countries that got this temporary break on the higher rates, and what were those rates going to be?
Sure. So take Vietnam. They were looking at a potential tariff of 46%.
46%.
Yeah. Sri Lanka was facing 44%, and the European Union was looking at 20%.
Okay.
So the pause gives them temporary relief from those really high figures. You can imagine the reaction, especially in places like Vietnam.
Why Vietnam particularly?
Well, for developing countries like Vietnam, exports to the U.S. are a massive part of their economy, something like 30%.
30%. Wow.
Yeah, so a 46% tariff, that could have caused a serious recession for them. Lost jobs, currency issues, the works. It wasn't just about less export money.
Right, so a huge weight lifted, temporarily at least, but as you said, they still have that new 10% minimum hitting them.
Exactly. Like you said, avoiding the hurricane but still getting drenched by a serious downpour.
That's a good way to put it. And what about countries that had free trade deals with the U.S. before all this, like Australia, South Korea, Canada, Mexico?
Ah, yeah, that's where it gets really interesting. Those deals meant zero tariffs on lots of their exports to the U.S.
Right, free trade.
Well, now they also face this new 10% minimum tariff.
Even with the existing free trade agreement.
Yep. The U.S. basically unilaterally changed the terms. That's quite a significant move.
I'll say, it must undermine trust, surely.
You'd think so. It hits the predictability these deals were built on. Might make those countries, rethink things, look for other trade partners maybe.
A really big shift then. It's not just about tweaking existing tariffs, it's hitting those foundational relationships. Now, beyond these new announcements and the pause, there were already other Trump administration tariffs in place, weren't there?
Yes, quite a few.
Are those affected by this recent pause at all?
No, not at all. Those existing tariffs are still there, unchanged.
Such as?
Well, there's still a 25% tariff on all car imports into America. That includes cars from the UK.
Okay, 25% on cars.
And there's the continuing 25% tariff on steel and aluminum imports, and also on products made from that steel and aluminum.
Right, the metals tariffs.
And don't forget the 25% tariffs on many imports from Mexico and Canada that came in earlier. Those are still active, too.
So the tariff landscape was already pretty complex before this latest round.
Exactly. These new measures are just being layered on top of that existing foundation.
Okay. So even at this partial pause, it really sounds like the overall direction of U.S. trade policy is still very much towards higher tariffs, right?
Yeah, that seems to be the prevailing view, yes.
What do economists generally make of this? Should we be reading too much into this pause, or is it just a blip on a bigger trend? Are there any, alternative economic views?
Well, the dominant view among economists is that we shouldn't overstate the pause's impact on the fundamental direction.
Okay.
For instance, Bloomberg Economics did some analysis. They calculated that the average U.S. tariff rate on all imported goods was set to hit 27% before the pause.
27% average, that's huge.
Highest in over 100 years, apparently. And even after the pause, their estimate is still around 24%.
Still 24% average, yeah.
Still the highest in a century, yeah. That really puts the pause in perspective.
It certainly does. So why isn't the pause having a bigger effect on that overall average then? What are the main drivers keeping it so high?
It boils down to two main things, really. First, that new universal 10% minimum tariff we talked about. It applies to such a huge range of goods from nearly everywhere.
Right. Its broadness gives it weight.
Exactly. And second, the simultaneous increase in tariffs on China. That's a massive factor.
Because of the sheer volume of trade with China.
Precisely. In 2024, the U.S. imported something like $440 billion worth of goods from China. That's about 13% of all U.S. goods imports.
Huge numbers.
So cranking up tariffs on that volume from already high rates up to 125%, well, that massively pushes up the overall average tariff rate.
Got it. So those two things, the broad 10% baseline and the specific huge hike on China, they just outweigh the temporary easing on some other rates.
That's pretty much the story, yeah.
Okay, let's zoom out again. Wider implications. Global economy as a whole. What's the general feeling among economists about these shifts?
The broad consensus isn't great, honestly. It's seen as a significant change in U.S. policy that's likely to harm the global economy.
Harm how?
Well, the further escalation of the trade issues with China is expected to make things worse. I mean, think about it.
Yeah. China and the U.S. Together, they're projected by the IMF to be something like 43% of the entire global economy in 2025.
Almost half the world economy between them.
Right. So if trade friction slows them down significantly, it's bound to create major ripple effects everywhere else.
You mean knock-on effects for other countries, even ones not directly involved in the tariff hikes?
Exactly. If the U.S. or Chinese economies slow down because of these barriers, other countries that trade with them or are part of their supply chains inevitably suffer too.
Makes sense.
And there's another thing economists point to, uncertainty.
Uncertainty.
Yeah, the very fact that these tariffs were announced suddenly, then partly paused, that instability itself is damaging.
How so?
Businesses get nervous. They hesitate to make big long-term investments when the rules of trade keep changing unpredictably.
Right. Hard to plan if you don't know what tariffs you'll face next year.
Exactly. That lack of stability acts like a brake on corporate decisions, which holds back the global economy. So it's the direct costs and the climate of uncertainty. Okay. Now, let's bring it closer to home from many listeners. The UK. How does all this impact things across the pond?
Well, initially, before the pause, there was maybe a tiny potential upside for the UK.
Oh, really? How?
Because the UK was facing the new 10%, while the EU was initially staring down 20%.
Ah, okay.
So some analysts thought maybe, just maybe, companies might shift some production to the UK to export to the US to get that lower 10% rate instead of the EU's 20%.
A small potential silver lining, perhaps, but that specific advantage is gone now with the pause, right?
Yeah, that's right. Now the EU is also facing the same 10% rate as the UK. So that particular incentive to favor UK production for US exports pretty much evaporated.
Okay. So where does that leave the UK?
Well, the UK government obviously hopes to negotiate a free trade deal with the US eventually, which could, eliminate that 10% tariff down the road.
A future hope.
Yeah. And it's really important to remember a huge chunk of UK exports to the US are services.
Right. Services aren't hit by these goods tariffs.
Exactly. And services are the majority of UK exports to the US. So that's a crucial distinction.
True. But for goods specifically, the UK is now basically in the same boat as most other countries facing these new US barriers.
Pretty much, yes. And like we mentioned, the UK is also still subject to those older, pre-existing Trump-era tariffs.
The 25% ones.
Yep, the 25% on aluminum and steel exports to the U.S. and on products made from them.
Do we know how much trade that affects?
Well, UN data suggests UK exports of raw steel and aluminum to the U.S. were around $720 million in 2024.
Okay, not insignificant.
And Global Trade Alert estimated that UK exports of metal products exposed to those tariffs were maybe around $2.9 billion in 2024.
Wow. Okay, that's quite a bit more. And cars too, right? Another big UK export hit by existing tariffs.
Yes, cars are key. The UK faces that 25% U.S. import tariffs on cars.
How much are we talking there?
ONS data for 2024 shows the UK exported about $9 billion worth of cars to the U.S. That's roughly a quarter of all UK car exports globally.
$9 billion. A quarter of their car exports? That 25% tariff must really bite.
You'd have to assume so.
Yeah.
So yeah, while services dominate the overall picture, specific goods sectors like metals and cars are facing pretty significant hurdles.
Okay, let's try and wrap this up then. Key takeaways for our listener. What should they remember from this deep dive?
I'd say first, the U.S. has put in place a very broad 10% tariff on almost all imported goods. That's a big baseline shift.
Right, the 10% minimum is key.
Second, this happened alongside significant unpaused tariffs on specific places like China and sectors like cars and metals.
Okay.
Third, this all happened despite a temporary pause on some of the higher rates that were initially floated. Don't let the pause distract from the main changes.
Good point. So overall, a major shift in U.S. trade policy.
Absolutely. Represents a major shift, and the widespread expectation is likely significant negative consequences for the global economy.
Okay. So to leave our listeners with something to think about.
Yeah, here's a thought. Given how interconnected everything is globally, how might these big shifts in U.S. trade policy actually end up creating unexpected opportunities or maybe challenges for people and businesses in sectors that seem totally unrelated?
Interesting, like unforeseen ripple effects.
Exactly. What new questions does this whole situation raise about how international trade is going to work, how it might evolve in the next few years?
Definitely something to ponder. It's clearly a landscape that's changing fast.
It really is. And having a solid grasp of these shifts is just going to become more and more important, I think.